What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at some charts. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Going to try something a little bit different today by request from some of the viewers. We're going to throw a couple different charts on there, but we'll start with Tesla. And before we get going, don't forget to check out the links in the description below. There's a links to the Rawstocks trading Discord. There's a links to Top Step where you can attempt to take a futures funded trading combine, see if you can pass and become a futures funded trader. There's some other links and also information about the socials where you can find me. So let's dive into Tesla's chart, and then we'll look at some of the other charts. Tesla had a massive sell-off on Monday, gap down, continued to sell off into Tuesday. Okay, found ourselves finding some support in the day, rebounding, right? And where does that support come? It looks like so far a draw on liquidity, running a test of the breakout candle from February 6th, and we found support closing above that candle low, right? Did not take a new low. Had every opportunity to come down and take a new low at 174.92, give or take, and it chose not to. Doesn't mean we can't hit it tomorrow, but for whatever reason, the market chose not to take that new low. So we'll see if we end up getting into the rest of the week with data heavy and Fed speaking, Jerome Powell speaking to the Senate and to the House during the testimony. So we'll see if that ends up dropping us even lower, taking that new low, and then we'll see where price goes from there. But according to our smart money concept so far on the daily chart, we have the inverted daily fair value gap, right? That could offer resistance if we were to trade back up to it. Could be resistance that could send us lower. That would look something like a move back up into the inverted fair value gap, right? If it offers resistance, then we look to take a new low, right? So you could look to take a short entry as we return to the consequent encroachment or the 50% of that inverted fair value gap, which comes in around 193.16. And your stop loss, if you take that trade, would be up around 197. This is a daily chart, so it would clearly be swing trades, not weekly entries. But you could look to take a trade inside that inverted fair value gap, and you'd be targeting 175. So you could look to take 175 out of the money puts for at least a few weeks, if not a month out when we do get to that price. And again, your stop loss would be right around 197, 198, and that would be closing that inverted fair value gap out or re-inverting it. And then you would take your stop if that ended up happening. Okay. Now we also can just find support here and rally, and also we could just continue to dump down, right? Again, with all the data, all the stuff that's coming out this week, it's entirely possible. We've seen massive sell-offs previously. Could be entirely possible that we come down, really don't find much support, come down even further. We know on a daily time frame from further back, we have order blocks and we have fair value gaps that are back in the low 160s and into the 150s. Ultimately, the largest order block being here, 160 down to 153.72 or something like that. And so, yeah, we could just keep selling off. And you can see structurally, right, that would just be here. We kind of have one wave, correction wave, right, and then a dump down to wherever we end up finding our support. From there, we'd be looking for price to then find support in some kind of, order block, fair value gap, something like that. And then, start to rally back or find recovery off of that, whatever that new low ends up being. But we aren't there yet. And so far we have not even taken a new low. And so we're just watching to see what happens as far as that goes. Now, you see I also still have my fib up, and this fib we've been tracking. We were looking for, first that gap fill at 207, roughly 207. Then we were looking for one standard deviation extension all the way up to two standard deviation extensions. Since looking at the max pain, which used to have April max pain at 250, came down to 240. Now it's down to I think 200. So clearly some of those calls were taken off the table, whether that was with this drop or whether that was up at these highs. that narrative has changed as far as expecting 250 by April or somewhere, up towards that area. Doesn't mean though that we can't still pop up, and head back to take these highs and fill the gap. There's a lot of targets to the upside, and we know that. And so doesn't mean that we can't do that. Now, if we take a new low and it holds that low, it's not just a liquidity sweep. A liquidity sweep is going to look like quick move down, immediate move back up, right? And then probably start to go higher from there. It'll run the stops out, trigger the potential breakout entries as we punch that low, and then immediately swipes the liquidity, heads back up. So as long as we don't get something like that, if we start getting daily candles closing below the low, then we are most likely going lower. So keep that in mind as we potentially approach 175. Not sure if we get there. I know after hours and overnight trading has rallied up a little bit. But we'll also have to see, again, with all the data, with all the Fed testimony, with the non-farm payroll this week, like things can definitely get crazy. It's already been a very crazy week. Again, typically, also we're looking for the low on a bearish week to be put in between Monday and Wednesday. And so we'll see if this low holds as the low of the week. Then we either, bounce up, maybe potentially trade sideways. We'll just have to wait and see what price ends up doing. We'll drop down to the 4-hour chart on Tesla. Then we'll take a look at SPY, QQQ, NVDA, and the stock that everybody's talking about, SMCI. So on the 4-hour chart, you can see we had traded up into that 4-hour fair value gap. There was also a weekly fair value gap that we had been tracking, and we traded up into that multiple times, ultimately found rejections, but left equal highs, many equal highs here. And equal highs definitely get broke. And so we will want to target those equal highs again. As you can also see, using our premium discount, we've come from premium up here. We've already hit discount. We're testing. There's an order block right here. Same in this discount range, there's an order block. We've come down into that order block. Now on the 4-hour chart, there is a deeper swing order block down here in the 158. And so we could target that, right? We could see just price kind of dump, pop back up, dump down into that order block. That'd probably be all she wrote if we got down into those levels. And then we would start to see recovery from that point. But we also haven't seen this 4-hour bearish fair value gap taken out. We haven't got back up to equilibrium. Also have another 4-hour fair value gap up at 228 to 233, give or take. And so again, upside targets definitely there. A lot of buy-side liquidity in all these peaks, internal buy-side liquidity. And so, we could just be, again, running back down to run a test of the previous low, coming down to swipe all the liquidity that had been built up, quickly deliver to it, potentially see a bounce. So we'll just have to see what the rest of the week brings. Now we'll jump over to SPY. SPY has some interesting things going on. We saw a little bit of a sell-off, but something I want to note, and I called this out in the Discords, is that we have a potential melt-up situation. So you can see using the fib charts, or the fib levels here, we popped up, we dropped back down below equilibrium, not quite to the optimal trade entry range, but below equilibrium down to discount. Okay, we ran up. And you can see how we interact with these fib levels, right? We run up, we kind of punch through the first two. We run up, we find rejection right around that 62 extension. Okay, we pop back down to the 0, right? And then we kind of shred through it, toy around with the 1 standard deviation. Then we popped up, rejected the 1.5 standard deviation we broke through, but we got this melt up trend line. And something that I called out is that we do have a potential melt-up situation, and we've already obviously been melting up, right, kind of aggressively on the daily chart. But I'm looking for 2 standard deviations of 533.37. Now, if this trend, this very aggressive trend line breaks, then that's done. We're probably coming back down to the 1 standard deviation of 471.77, right? I know there's a fair value gap inside here around the 480. Right, we could come down and take the sell side liquidity here at 467.55. Right, so at that point, it's a different story. But right now, we have this aggressive trend line, and I'm really watching for it to go up to this 2 standard deviations before we see a more meaningful correction. So we'll be watching that. Have that on your chart as a potential, or at least this trend line to be watching. If we jump over to QQQ, we got a very similar situation. We got this melt up trend line that's very aggressive. I've already taken one standard deviation. Again, potentially looking for 2 standard deviations, bringing us right around 500, right? 498.03. If it breaks this trend line, different story, right? If it breaks the trend line, what we will be watching for is for that break, that retest, right? And then we'll be watching the same fib levels. You see reactions at the -6.2. Right? You see us pop through the 1, but then find support on it, right? You also see us have some reactions around the 27 extension, right? As we popped through it, found support, popped up to the 62, came back and tested the 27 extension, tested it again, fell through it, and then ultimately we broke up above it. But those trend line or those fib extensions can be, or fib levels in general, can be very useful when you're looking for extension targets, retracement targets, anything like that. So again, if we break down through that trend line, look for it to potentially backtest, use those fib levels as your targets to the downside. And then likewise, if we continue up this trend line, we'll be looking for 500. Pop over to NVDA. NVIDIA has already taken the 2 extension at 828.84. At this point, NVIDIA is so overbought, just keeps rallying. There's really no trend to be watching. If you were to draw a trend line, it might look something like this, and you can see we're really blown off that trend line as well. So when the rug does finally get pulled on this one, it's gonna be bloody. But for now, it just keeps going up. So what you could be watching for if you're looking to take a trade on NVIDIA is you can look at your daily candle. You can look at your open and your close. Right, and what you can do is just draw a line for the current daily range, and then you can also draw a line for the previous daily range as well. These are very close, so I'm not going to draw that. So basically, if we break above, 860, where did we close today? Closed at 859.64. So if we open above that or break above it, you can try to take the trade up to 876. Where's the high of that candle? 876.95. So basically from, 860 to 875, 876, 877, something like that. So if we break above this, we'll target this, right? Beyond that, it's no man's land. Also, if we close below, or if we open below here, right, of that same level of basically 860, we could be looking to target 836 to the downside. If we break that, we got a fib level. If we break below that, we'll be targeting the low of this candle. We also have a gap fill here that has not been filled. So a couple different things you could be looking for on NVIDIA, potentially all the way down to 823 where that gap is. So, use those levels if you're going to be looking to take a trade. But like I said, it's very overextended. It's very overbought. If you look at the RSI, there's a lot of stuff that needs to be eventually filled, to the downside. You got volume imbalances, you got fair value gaps, right? You got massive gaps here from earnings. So all kinds of stuff that, could lead you to target, the potential downside. The only problem is that you want to see some kind of confirmation before you start going heavy on shorts, because right now we're getting green candles, right? This candle right here today closed above the close of the previous day. So until we get some kind of bearish candles, I wouldn't necessarily be trying to short this. I would be looking to go long or waiting for confirmation of some kind of bearish candle that you may be able to attempt to take to start a short position. Then the last thing we're going to look at is SMCI today. SMCI also closed above. We had a bullish engulfing candle today, and I got the levels over here on the side if you want to take a look at them. But basically similar to NVIDIA, if we open above the high of today, which was 1097.50, if we open up, you could try to target 1155. If we open below that, you could try to target the low of 2 days ago of Monday's candle, which was 1020.34. And then ultimately, if it broke below that, you could look at targeting today's low, 976.10. Now, I know for you options traders, these contracts are incredibly expensive. And also, this is another stock that's just completely blown out of proportion. And, RSI would signal that we're going down, but also, again, we're having bullish candles. We do have a lot of downside targets. We got gaps to fill. Right? We also have plenty of fair value gaps down inside the run up, all the way down to 32.86 to 410. Also another large fair value gap here at 607 to 626. So lots of targets to the downside. But I would wait for some kind of confirmation, right? Our RSI does look like we're getting divergence, right? We set a high on the RSI from February 16th. We set a new high on Monday, set up RSI divergence. So we could be looking for that short entry. I know a lot of people are eager to short this, which is also part of the reason why it probably isn't wanting to just fall quite yet. Because there's a lot of premium being made on people trying to, on market makers selling put contracts on this kind of a stock. So be careful if you are trying to trade things like SMCI or if you are trying to trade NVDA. Best thing is to ride the trend until there's a clear trend break. And in this case, again, just like NVIDIA, the trend is a little wonky, but could look something like that. At that point, though, we've already dropped so far unless we kind of trade sideways. If we drop so far, we're already all the way down below 900. Might see a nice drop down to 800 or 700, but we've already missed a big chunk of the move by the time that trend breaks. So, do with it what you will. But I hope this information has been helpful for you guys. We'll be back on the next one. And again, don't forget to smash a like, subscribe, share with all your friends. I really appreciate all the support. You guys take care.